which are happening on the street or some corporates as such. So you may get an idea what we can do intervention, and that will do magic, and people can start paying for that particular product or the service. So when that idea comes to an individual or group of people, um, do we start immediately making the revenue out of it? No, right? So it has to be a product or service when incurred. Huh? It should give the value to the customer. So that particular point of time, people starts paying you. So for example, you are taking education, right? So any new college you are say getting it into, there will be a lot of speculations whether I'll get the real value, I will get the campus placement or not. But then the established college like SSGMC, when you are coming to, you are sure that you are going to get the value, right teaching, right ambient environment for the study and the campus placements, right? So for a new college and then the matured college, that's the difference. So now imagine you are a very new college. So people will be apprehensive of your education quality, services, and the behavior of the college, whether the college will be able to give you campus placement or not. So similarly, when we conceive an idea and say build a product around it, as all of you now know the technologies, we can take one example of a technology, say a CRM system, right? So initially, if the CRM system you are trying to build, so that building, whether you are able to manage the data of your customers, and then based on that, are you able to build any trends or not? That itself, what happens initially, if you are not able to build, then what happens, your idea either goes on to the hold, that you may say I will actually develop after some time, or it takes a pause, or you may conceive another idea and then that goes for the die, right? So so if you see this particular the picture which is in front of you, onto the bottom of side you see the value of death. So to any idea or any product or the service that we conceive, it may actually go into the death mode. uh, Sometimes what happens, you conceive that idea, you build the product, but you don't get the customers. You get some customers in another scenario, and those 4 or 5 customers, out of love for you or the appreciation for you, they may take your product or service, but it does not get the larger acceptance, right? So in such scenarios, it or the functioning of that particular startup comes to an end. At a point of time, it could be a possibility you feel that I should initially offer at the lower price so that people, gain to use it, and at a eventual time, people will uh, start accepting it. It will become the need of the people, and then you can actually, price it higher. But then, as an organization or the startup that you have to run, you will have to pay the salaries of the people also. Okay, so you will not be able to function unless there is a money from the people. So generally what happens, the startups comes to end. And it may be surprising for you, or you have already gone through the reports. In general, 80 to 85% of the startups, after 2 to 3 years of functioning, they come to an end. So the value of death is a very critical phase in the startups, life. Now, the people who understand that this particular innovation, even after 4 or 5 years, it certainly it will fulfill the need of the people, and then it should start making the money. So people invest that particular point of time, believe in the idea. And example, I mean, Amazon is the best example. So almost like 18 to 19 years, that organization, while doing the e-commerce, was in losses, but then people believed in that, and today we see Amazon becoming profitable. So that convincing Jeff Bezos has done for the people, uh, and he has given hopes to the investor that they will be gaining more returns from the investment that they have done. Okay, so so I'll just explain again. The first portion of the time period that goes into the startup life cycle is that when you initiate that idea, you discuss with the people, and you will always need some money to incorporate that service or idea. um, when you interact with the people and people having money in your friend circle. So if you see, there is a abbreviation or called FFF, that is, so some of them could be your friends, some of the family friends, or some of the far off the friends. They may believe in your idea, or the they may have that particular sectoral understanding. They see that this particular idea will work, so they say, "Ki, you can utilize this 4 lakh 5 lakh rupees." In general, the friends and family put together 10 to 15 lakh rupees on an average, while the friends and family could be a very different if the person comes from the business family. And in that scenario, the friends or the initial capital could be in crores also. But for the startups generally which come out of the college ecosystems, they may need the small investment of 4 to 5 lakh or 15 lakh to begin with. Okay, so the people who believe in your idea, they are like angels, right? So they believe in you more than actually they think of what returns I'm going to get from this particular investment. And that belief is a nature of like angel, that he's actually putting up the breath in life of your startup. So that's where they are called as the angels. Okay, and all this stage where you have hardly the customers who are into procuring your service or the product, um, that I mean, before you actually start selling it to customer, it's more of a stage. It's like uh, the 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 seed is taking life. That's why it's called the seed capital. So you are germinating. You are trying to put the which will ultimately do the photosynthesis and be capable of generating its own food. That means, if you do the analogy of it, that particular point of time when you are able to sell your product or the services to the customers, you are able to generate the money. But then prior to it, whatever capital that comes in the form of angels or in the form of friends and family and far off friends, it's called as the seed capital. Okay, and unless the idea is very strong, it's a rarity. I will explain you later that even to your angels or even friends and family, or the seed funding agencies, how you should present your idea. uh, because if the idea is not scalable, if idea is not go far off generating the revenue, it will be just an idea, and which will see the it will be up to the only value of death. It will not go further. Okay, so you have to present it. That I'll explain all that how one should be able to do. So I'll just take first now you to the life cycle of the startup, what happens. So I've tried to explain you the seed capital, or the stage where the initial part comes into picture. As you start generating the revenue, you cannot keep on losing the money, because what will happen if you keep on losing the money, the ultimately you have to stop. Every company cannot be Amazon, where they cannot keep on pumping the money for 16, 17, 18 years, right? For us, to in India, hardly people believe that something can work for so long. So already we have very negative sentiments about it, because primarily we are the society. We are happy about to get the jobs. Thanks to the startup ecosystem, now people take pride in saying that I have started a startup. Otherwise, in past, it used to be a different scenario. Why you are actually disturbing your life by leaving the settled job. Um, so 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 now here, we have to ensure that we are doing good. So when you are onboarding the initial customers, it starts gaining you the money in the financial term. if you achieve the break even, that means that every product or service instance that you are selling or doing is generating the profit, uh, at least which is able to manage your organizational expenses. So you are no more making a loss. Is called break even stage. If you pass that particular stage, it's called a milestone. And then people who are into the VC stages, or the VCs, they are more tend to put money into it, because when you're not making losses, you're making money. That's the eventual stage we should be achieve. So post the seed capital or the seed stage, we get into the pre-series A or the bridge rounds, where generally people take 1 or 2 crore in Indian ecosystem, while in when you are in Western ecosystem, that translates to the $1 million or $500,000, where you consolidate your product positioning or the service positioning, and you actually make more customers on board. So that's the early stage. So series A, series B. So in general, it's towards the maturity. You keep on adding more functions. So I've just tried to explain you earlier that. So a CRM, if you have developed, now you started adding on to the customers trends, and you understand a customer, say, who's into the age group of say 25 to 30. There are XYZ needs for that particular customer, so you start actually putting up more business functions, so then to earn more revenue. And that's where actually um, uh, 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 the more growth for the organization comes into picture. The growth in terms of the offering, growth in terms of the revenue, and growth in terms of the valuation. Now valuation is a function of a market response to you, and at the same time the potential of what it can do to the society, or what value it can add to the market basically. Okay. So when I say that larger the market size of anything that you do, that is a service or the product, the higher the valuations you can achieve, higher the team that is placed to go. Because you must have seen some companies, they are initially do a regional, then they go to India wide or the country wide, and then go global. Say for example, Microsoft, if you see in 80s, they have started in that area itself. They were very close to the that particular university, and then eventually they went to the corporate, and then it went on to a multinational. And today we see, like, we cannot live without Microsoft technologies. We are conducting this particular session on the Microsoft Teams as such. Similarly is the journey for the Google also. They started with something else, just a search engine, but it's now entire ecosystem and one of the most valuable company on the earth, right? So that actually later stages it goes, and eventual stage for this company is not always that every company goes through the IPO stage. Some of them are privately held. There are companies goes to IPO, again goes back to the public private mode also. So this is the life cycle of the organization. If you see the red line that is featuring up there is more of a showcase of the grade. So value of death is where you get initial traction, then there is a deep, you consolidate your customers, your product offering, and then you starts making money, you come to the break even, and then there is a tremendous growth that takes place, pumping of the money which comes from the VCs help you to fuel the growth, and it also represents a valuation aspect also. Okay. Now, while I have said all this, one has to prepare how to achieve the even first round of funding, and how do we present. So any example you can take in your mind, and you run along when I'm actually explaining you the slide deck for the preparation of the deck to get the funding as such. Now, here, if you, I mean, for this particular stage, if you have any questions, let me know. Or Kankaleji, how you have planned for taking the questions at the end of the session, or we can go in between also.
So we'll take at the end of the session.
Okay, great. So far so good. Any questions here? I mean, any observations? Okay, good. So this more of a, this is also called as the investment memorandum or the pitch deck for the startup. So if you have come up with some idea and you want to give it to the people who are keen on investing with you, they should have an idea, because all the time you cannot be just saying it by words, aisa hoga, vaisa hoga. No, no, you have to actually bring it onto the paper. So your thoughts will get streamlined, and it will also help you sharpen what exactly you are going to do, because you cannot do multiple things when you are starting, right? Just like in college, when they started with one particular focus or course, and then they now you have like multiple streams to offer. So here you should you know bring your all understanding on onto the paper. Devise a name for the company, some good names people will remember. When they read through, they should have always have a recall value of the company. Now there is so much of flood of the companies, startups, so it becomes difficult to remember also at a point of time. So in my life, I mean, every day I come across four or five companies pitching to us for the investments. So it's difficult to remember all of them. We have a limitations as the humans, true, right? Yeah. So you should design a very good logo for your offering, and then that logo should correlate with the name and correlate with the product and the service that you will be offering. And you should devise a proper line for your organization, which should ensure you are carrying the message of your product and service for that. Okay, I'll move on to the next. So this is the flow that I will take you through. So when you think of an idea, right, you should have in mind, and then your brainstorming within the team should come up with the vision and mission statement uh, for the organization. So vision is larger goal that you want to achieve. Mission is something you will be able to do in next 6 months to 2 months, 2 years of the time period. Okay, but when you are starting, you will always find out that there is something which is already in the market, right? Say, I'll take the popular example of the chai, right? Tea. Everybody is making the tea. Then what's the difference in your tea, right? But then you come up with some different masala, right? And that may liked by the people. It may give the health benefits, right? People may recall the test that you have actually done, right? Or the CRM you are building, right? So the existing CRMs that are there, what they are not offering, and that is a pain even for the customers who are doing it. Or you are starting a college, then what this college is not providing, and when you are starting this particular college, what people are going to get benefited from. So every startup when you are doing, or idea that actually you should test on what problem I'm going to solve, whether it's a need or the want of the customer. Do you really need it? I mean, just if we get into a healthcare aspect, um, whatever solution that you are actually doing, is it a vitamin for them or it is the painkiller for them, right? So uh, if you are in a pain, that's like your customer is in a pain, right? So what he will do, will he take the vitamin or will he take the painkiller? He will take the painkiller. But for the preventive one, he will say, "Okay, I'll take the vitamin pill so that my health will be good one." So when you are starting, you should be clear on what value you are going to add to the customer. What are the current alternatives? Because if current alternatives are there, then your customer is always going to judge between, right? So what is the best alternative for me? And then I'll go for it. So unless they see that my offering is going to add more value at the lower cost and there is a longevity, then there is a chance that that customer will take that solution from you, that product from you, that service from you. Okay, so we have to always get into the shoes of the customer, understand. And for doing this, you can go and talk to your customer target group, build a questionnaire, understand whether real pain is there or not. Whether it's say immediately say, okay, I will buy this service, or I'll buy this particular product, or they say like, okay, I'll see, we can have it in future. That means that's not their dire need. So that gap has to be identified, and for whom that is the target group, you should be very much, clear about, because something which works for a very toddler may not work for the adult or the one someone who is into the young age, right? So you should be clear on your target group, and once you finalize your problem statement, target group, you should also figure out how exactly your service offering uh, you are capable of delivering, that you are consolidating is better than others. um, I probably have explained this particular thing, that we have to have the value proposition for our customer in a nutshell. Okay. Now, when you are offering that particular value proposition, say it's a CRM, right? So as CRM is a technology that can be distributed globally, right? But then your CRM is going to get purchased by the large corporates or the mid-sized companies or even the individuals, right? So, say for example, tea maker, he has a certain, say half a kilometer target area who all his customers are, right? So, for him, a market opportunity for one establishment is probably the people who are drinking the tea in that particular circle, while the CRM entire globe. But in a globe again, will a Microsoft like company will have your CRM done? No, they certainly not, because they do have their own. So you will certainly have to start with a small, so probably a company which is doing in MIDC. You have to go and find out how they are managing their database of the customers, and are they using any alternative, or they're managing onto the WhatsApp only, and every time they get into a WhatsApp, do they have a ability to consolidate and figure out, say what happened 15 days back to a particular order that was actually received from the customer, right? So market can be a global market, can be regional market, can be by uh, the age group, by the sector. I'll give you examples of the various sectors in the subsequent slides that will come, but then we have to figure it out. And market opportunity is very, very critical parameter in receiving the funding, or presenting yourself. The cut you should be able to figure out, say if this CRM that you have built, if you are able to charge per user say $1, and then the 100 million people are supposed to use it, right? So $1 multiplied by the 100 million customer is your $100 million opportunity. Okay, so 1T multiplied by the people in the your half a kilometer radius, okay, is the market opportunity for that tea seller, right? So if we take the college, for the college, the market opportunity, maybe India-wide people are coming to this particular college of SSGMCE, right? So based on to the service and the revenue you make on a particular product or the service, you define the market opportunity. Now, if we say globally, market opportunity is huge, right? Say for a CRM, but then at the same time, your CRM is not going to get purchased by the Microsoft on day one, right? So it has the limitation on your delivery, because on day one you are not going to deliver to Microsoft, as I mentioned, right? So you'll be able to deliver it to some industrial guy in Khamgav MIDC, or some Aurangabad MIDC as such, right? So you can address that guy only. So what is that pie? So of the total addressable market is a global one, right? But then you can actually reach out to the people in Mumbai, people in right Delhi, not date one onto the New York folks or the London folks. So when you are wherever you are able to reach out, that is your serviceable, addressable market. Okay, so we should have the understanding on the total addressable market, that is called as TAM, then serviceable addressable, that is called the SM, And then there is a SOM called serviceable obtainable, because day one you have built your CRM, you can go to Khamga and 4, 5, or 10 the market that industry leaders, you can actually go and talk. So that's your obtainable people. So out of this 5 people you presented, one can get converted into a customer. Okay, so you should have an understanding on the market opportunity. I'll just take another example to simplify this particular thing, right? So let's take a burger, right, or the samosa. So one single samosa vendor, right, he can do a business in one particular ferry, but when he goes with the franchises, probably the market can go countrywide. And you might have seen already, right, the burger, the McDonald's, right? So McDonald's is all across the world, so for them the market opportunity is huge. So similarly you have to actually figure it out. Yeah. um, so so revenue that you make multiplied by the customers that are existent, the customers that you can address, but in today's time your capacity to address. So these are three layers that you should figure it out. So so eventually with the money and the resources that you get, you will be able to serve them. So larger the market opportunity, larger the ability of your team or individual. I would not say individual, it is team always defines the destiny of your group, how you will do better in the future or receive the funding. So this critical parameter you have to understand and calculate and rigorously figure it out. Okay. Yeah. I've given an idea earlier, right? So when you have done this product or the service, right? So how exactly, people will like yours solution, because there will be n number of other solution or the workaround that people are using it, right? So your secret sauce should liked by the people, whether it's a solution. Say, for example, if you are into uh, antivirus solution, right? So people are using XYZ antiviruses, and then you have built a new system which really people need not to worry about. They need not to go into your software and make any changes. It takes care of all, right? So for the competition, you are scoring more because you are making it more user friendly. Okay, so you should be able to figure it out. What are the alternatives in the market, what they are offering? Okay, so initially when you are building yourself, I try to explain you should have the uniqueness so that people will like it. So you should do the comparison and showcase it to a customer. And similarly, when you are showcasing it to the investors, uh, that investor will see you have an edge. And then it is not only that particular age, because the competition may have more money, and then your uniqueness they can build in, say 2 months or 3 months or 4 months time period, and you will lose that edge, right? So how strong is your uniqueness? That is a secret sauce which will not replicated by the people. Coca-Cola, right? So Coca-Cola has a secret recipe for that particular test. So there are so many, I mean, thousands and probably the lakhs of the different drinks and the combinations which have come. But still, people go for the Coca-Cola or the thumbs up, right? So you should have that, and there should be a clarity on explanation how exactly you are going to defend that for the longer duration, so that investor will feel that yes, this company or this particular group will make money for the longer duration, right? Yeah. So you should be able to do the proper study on your competitions and put your functional advantages or the value proposition in a proper tabular format when you are explaining the competition, right? When you have figured out what exactly your solution is, then there are stages to go to to the customers, how you will approach them. Okay, how you are going to say approach, say, as I tried to explain it earlier, as you will not go to the day one selling your CRM to the Microsoft, right? So you should have the clear plan on your product or the service, that where it will go, when you're starting in Shegaon, you should probably go to the Khamga, right? Or go to the next metro as such. Or it could be a probability that you finish your graduation, you come to Pune or Mumbai, and then you get started. So you should have a plan for the market, to whom you are going to get onto the first as a customers, and then later point of time, because you will have the limited ability to serve a customer. You cannot have the unlimited or the higher capacity to serve to the customers. And eventually you will also have the consolidation, or your product again will not be 100% developed on day one. It will be like 30% developed, but still what value it is adding it to the customers, that you'll have to figure out. So you have to figure out the ways and means to reach to your customer with the limited product offerings that you have. Okay, so you should properly devise that. There are various material also available onto the internet, and you should also, I mean, this terminology is generally called go to market approach. Okay, so go to market strategy you should be having, and that is clearly visible onto the deck, which will be read by the angel investors or the VC funds as such. Okay, you need any help on that, I'm there to help. Okay, we'll move on to the next. Now, you have shown the picture that I'll be big, I'll make more money, but how you are exactly going to make the money, right? How and where, and for what actually customer is going to pay. So I'll give an example of the company that we have invested in. Now you all know the LPG cylinders that is coming to your home, right? Now this LPG cylinder are handled very brutally. You must have seen and people throwing the cylinders, and they are prone to make the dent. Sometimes accidents takes place due to that, because a cylinder cannot be forever strong, because if it is continuous dent that is happening on a particular surface, it may break, right? So in the current mechanism of uh, the testing whether your cylinder is the right one to carry that gas at a certain pressure, it goes under the water bubble test. So your empty cylinder goes under the water, and it figure out whether there is a leakage or not. And then the gas is filled in it, it's getting packed, and then again it goes under the water, and there is manually someone observe that particular cylinder whether it's emitting any bubbles or not. If it is emitting a bubble, that means that there is leakage. But it could be a possibility for that particular moment it is not emitting the bubble. Out of that pressure it is able to sustain, but there could be that surface is to the yield point, and the moment it's out of the test during the transportation, that particular point may get hit, and there could be a spark. At the same time the gas may come out, and there could be accident, right? So now the company where we invested in, what they have done, you need not to have the water park, right? So you have a, a computer vision placed in, and that does the thermal profile of that particular cylinder. It figures out if it is a dent, the thermal profile is different. When you have pressured, I mean, you fill the gas inside that, it will build another thermal profile. And those thermal profile will point to the area where there could be a yield point, and that particular filled cylinder is taken out of the system and it is discarded, so that the accident can be avoided. Now, in this example, erstwhile people had to replenish the water every day, and the cylinders comes from the different places, so the water used to get muddy. You may not get the right, result. Your tests are not your testing itself is not accurate. But with the computer vision, now it's happening. So now The product seems to be very good. It is going to a next level of what is the offering um, by by the erstwhile to this new one. But then how this company should price it, right? So this company is adding to the safety of the cylinder. So if tomorrow time any accident that is taking place, it is averting. So a company can make some payment of 4 or 5 rupees per scan of the cylinder to the company who has innovated. So every scan is a revenue point for the company. Now, what has happened? The water bath test that was happening erstwhile, and this test that is happening. So, in a day, the plant was able to process around 8,000 cylinders. But with the new model or the new, innovation, they are capable of doing 12,000 cylinders a day on that particular line. It means that 4,000 cylinders are now, say more 4,000 cylinders can be processed. It means that the company is gaining more. So this innovation company or the startup company charge more to that particular innovation to it because it has increased the capacity. So for example, 1 rupee per cylinder, if we consider the cost of it, it's a, just example I'm taking. So erstwhile the company was generating like 8,000 rupees, now 12,000 rupees. So the startup company can take some share of the new revenue that is generated. So you have to figure out your service or the product, what value it is adding to your customer, and based on that, you should figure out what sort of revenues you should charge for the customers. So, for example, if a tea seller, right? So he's selling the tea, but then when he's selling the tea masala also, it becomes another revenue channel for that. And you should figure out what are the exact points you should charge for. If you go for the CRM, you will have the you can plan to charge for the features. If you go to CRM and figure out what is the pricing that they are coming up with, then you will find out the revenues that they're making based on um, the various features that they are doing. You may say like beginner, and then for the mid-size company, and then for corporate, find different functions. So different revenue model that it's. Yeah. When you're doing this revenues, um, you'll always have to figure out and how much customers you have onboarded in the initial time, month on month, whether your customers are onto the rise. Say initially for a month you have signed up 10 customers, next month you should definitely up because you are now with more money, more recognition that yes, your product or your service does work. Is it able to go and attract more customers? And that is called as attraction. So when you are selling initially in the Shegaon area, now Khamgaon area, now to the division of Amravati, then to the Maharashtra state, or so geographic expansion also, you should have the clear idea on what exactly you are doing today, and then in tomorrow's time, that traction should be reflect in terms of the customers that you are gaining, the money you are making, and while making this money, when you are planned your go-to-market strategy, sometimes it is not always to have your own distribution channel, and there is some distribution company comes into picture and it says, okay, I'll offer my distribution to you. Let's say like um, uh, you have actually a bakery. I mean, I'll take another example now, and then there is a existent distribution channel, and then you utilize that. There are chances that you yourself can reach out to 5 or 10 outlets, while when you sign up with the distribution existing distribution channels, probably you can go to 200 or 1000 uh, customers, or the outlets in quick time. So, for example, you have a very good product, and you yourself have tried it, and if you have heard the name called Udan as another startup, and you actually convince the Udan people that this product is really good, and then they can actually take probably you to across the India, or to the every retailer, right? Yeah, if it is a technology product, probably those who are selling the technologies, you can sell your APIs to them. So what sort of strategic alliances you build in that can give a leapfrog to you? That's something you should figure out, and you should depict that and showcase onto this particular slide, so that this is important, because this gives a clear understanding what you have done and what you are supposed to do to the investor. Okay. Now, when you are starting initially, we always do have, we hold our ideas to ourselves in them, right? But then when it is a team, right, um, you 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 do a better understanding of what we are going to do. So there is a brainstorm takes place, the proper refinement of the idea that can happen, and that always happens into the team. So for the investor, if it is an individual, then it is always a risk that if something happens to you tomorrow, say you may have a family issue, and then for 15 days you will not be able to focus onto the business, then business will take a hit. But then these people have already invested in you, so they generally tend to avoid a team, or a individual startup, or a team with only two people who are trying to struggle. So there has to be a team which should be able to take care of multiple things. And say, when we all come from the engineering background, we have lesser understanding of the money. We will always say we will invest into the product, but when we have to take it to the market, we do not have the money to go to the market, then we blame it. But startup is always automated. It has to be a very planned activity, and someone should take care of your money. Someone should take care of your operations. Someone should take care of your continuous research and product that is done. One person cannot do everything. When it is like a team of 5 or 10 people, you will be able to manage the human resources properly. But when money comes in, you'll always see that the founders started fighting with each other, and then uh, everything goes haywire. So you have to have the people who should advise on the various stages of your company, that uh, team or the founder one should be focused on this team. You are say, like, I'll just say narrate the function. So like, your CEO should be overall in charge of the scenario. Someone is the technology CTO kind of things. Someone has to be, I mean, this is very critical, right? Someone should understand the money in the overall initiative. That it's not only the product, right? So it's a business is always a combination of whatever product or service, and then managing the operational cash flows of that for the organization. So someone should understand the money flow. Okay, you cannot just spend your all salaries, on money onto the people. You will need the money for advertising. You will need the money for procuring the raw material. You will need the money for people to host some. If you are doing a function where you are inviting your customers and giving a test, so you need the money for all that, right? If it's a factory to be done, then you need the money. So whether to take it from the bank, or whether to take it from the investors, or whether to put from our own packet and loan it to your company, you should have all that combination. So the team should comprises of handling the multiple functions, and someone who has like done and dusted, have seen multiple companies. He has helped some companies to grow together, will be unhelpful. And in this scenario, you generally give some equity to those advisors, such that you gain the 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 knowledge and then the experience that they have earned in their life. They know few connections. Those probably as a team you may never be able to get it, right? So while I do work in the my fund on day-to-day basis, I interact with this startup, and I always keep on meeting the people and help them on to go to the next customers, as a next deal for them, as such, right? Yeah. So you have to have a proper team which should take care of the various functions. You can always Google, figure out with respect to say your idea, what all functions will be there and what all functions you will be able to manage, your team will be able to manage. It's very important. You cannot expect say 10 computer engineers coming together and they do not having any marketing guy with them. It's very difficult that they will be able to propagate it to the market. So you should have one guy who's experienced into market, or at least having an understanding, figuring out where your product or service will go, right? Yeah. So now this is for the existing company. If it is there, we'll always try to see that the company should have the financial projections and the past matrices also, um, the where the expenses are going, how exactly customer conversion is happening, how you are able to penetrate the market, what percentage of the market you are targeting. Um, Last 3 years or the next 3 years, you should be able to figure it out. Okay, how much customers you will be onboarding, what will be your revenue, what will be total expense, what is EBITDA, right? So these are all financial terms, but then you will have to learn as a CEO when you are presenting where what is the tax for this particular service or the product are there, which will have the financial implications on your offering. Okay. And if it is you will need the assets to get developed, then how much money will get into the those assets, how will depreciate, how your overall profitability will look into like 3 years, 5 years, 7 years down the line. And I am not saying exaggeration, but people do see that if you are able to envisage your journey for next 15, 20 years, how exactly it's going to be, you should have the clarity. Because if you have that clarity, then only you will be able to convince people to invest in you. If you have the clarity on your business offering, then only your customers will get onboarded to you. I'll give an example of here, right? So a company called Precinto, where we invested. That company was having, I mean, there is a solar power plants, and solar power plants have the various monitoring sensors on it. It understands what is the dust actually accumulated on the surface of it, um, uh, whether there is any fault that is happening due to the corrosion. So it develops the various signatures. What this company have done from the data that they have acquired from the solar plant functioning of their inverters mounted onto the solar panels, um, and then the wiring as such. So all that data which has generated some signatures, they correlated with the what is the problem that is associated with it. So for example, if there is accumulation of dust that is happening onto the solar panels, what's going to happen? Naturally, there will be a lesser voltage and current generation will take place, lesser energy that will get produced because that dust is hindering the rays to pass on to the wafer which is generating that phenomena, right? So the signature, as soon that signature is captured, it triggers a signal to the robot that is installed on that power plant, and then it takes care of that cleaning of the dust. And you know uh, initially, if it was a manual activity or someone has to go manually and press the button, now that's no more required. If it was a scheduled activity, every week I have to clean up that. Say for example, you have cleaned it out on Monday, and the moment your cleanup activity is done, Tuesday there is a sandstorm, so you are going to lose the power generation for next 6 days, right? But now in this new scenario, this particular innovation has taken care that immediately the dust is getting removed. Similarly, if there is any fault and that can be cured, so it automatically generates signature and allocate the work to a robot or a human so that their uh, um, solution is working. Now, these people, when they project or prepare their financials, they figure out across the globe how many solar power plants are there in existence, and how many come into the future, because you must be hearing about the news on to the sustainability of the environment. and there we are all going for the clean tech. So there are a lot of solar power plants to come. So in future, how it's going to come. So um, so you should be able to visualize the next 15 years, 20 years, how many solar plants will be there, and how I'm going to serve that particular market. Yeah. So it's a not mandatory, but it's always good because the funds also have the mandate of reporting into the ESG and the SDG terms. So you probably should figure it out. What are the UN SDG goals or Sustainable Development Goals, and whatever your I'll distribute this slide to you. You can go to this link and figure it out. What are the various SDG goals and how you correlate and whether you are making the impact. It could be the life underwater. It could be like you are empowering the people to earn more. Say one of our company called Fun First that is invested into. These guys have actually done the upskilling of the resources. So close to 60 or 70,000 people that they have trained, every month, almost 11,000 per candidate who got into their system is earning more. Okay. So that sort of empowerment of, the livelihood by earning more has been, and then that can be correlated to the UNSDG goals. Okay. Now you may be, say having a question where ये सब तो सुन लिया है हमने, but where should we innovate and do some, brainstorming? What is an idea? Some of you may have already thought through, and we engineers generally keep on coming with we should do it this that. So what are the sectors actually we should do? And in today's time, some of you must be hearing more buzzword onto the artificial intelligence is going to change the world, and yes, it is going to change the world. There is a report from the PricewaterhouseCoopers which says like 15.7 billion dollars. Sorry, 15.7 trillion dollar value that can be or that will get created to the artificial intelligence by 2030. Okay. Now you compare the size of the value that is going to happen due to the artificial intelligence innovations, right? So India's the current GDP is 3.7 trillion dollar, and we are talking about 15.7 trillion dollars. So almost like 3 to 4 times of the GDP value will get added across the globe onto the various business terms. So if you see, this particular field, uh, there is a verticals we can call it as. So onto the left side, so there is an internet governance, or someone can actually come up with the solution. So that when I say internet governance, that there are the security aspects coming into picture. There are pornographies also get into there. So you can actually build a solution which ensures the safety of the people. There are no scams happening. So internet governance can be one area, right? So everybody is having phone. Why I'm stressing on this particular, because everyone is at risk with the phone, their identities, right? And when you have the Paytms and then other financial applications, if you come up with a solution that ensures ki there will be no scam, or you will not be getting schemed, you will build a very valuable startup in that particular segment. uh, we are all concerned about the health. One or the other point of time you went to the hospital, or had a consultation over the telemedicine also. That's another area. Ocean, like 3/4 right of the, we have life on onto the earth, and there's a lot of activity happens onto the ocean, right? So when I say that, a lot of activity. So if you see the products that you are using, if you are using a laptop, right? So it's not something which is just manufactured in Pune or Mumbai, right? It has traveled through the ocean. Certain components have traveled to the ocean and come through to us. So there is a saying. I mean, it's based on to the data that anything we use, 80 to 85% of that has traveled through the ocean. Right? There can be a science and technology may innovations can take place, your mobility, transportation, your digital identity. So if you go through all this, you'll try to find out where my innovation, where my uh, you know uh, solution can I mean it is for this particular area. If you are not clear about okay, where I should work on, but then there are so many areas to work on that you can figure out. Yeah. um So as I have actually taken you through the flow, so that flow, as I mentioned, you present you to the folks who are into the angel types. That is, first of all, you should, rather than approaching all these guys, you should have that in your circle itself. They should fund. And when you have a little consolidation in terms of you have a few customers on board, then you have these people. I'll just say read out them like Aha Venture, Cheeto is the another venture fund. Indian Angel Network is there. Venture Catalyst is there. Less Venture is there. There is a Angel List, Hyderabad Angel, Lead Angels. And then, in SSGMC Alumni also, there are a few people who do make the investments on that individual capacity as angels, right? I'm not sure you know the name called Himanshu Goyal. I mean, he is one of our early alumni, and he has made the investment into 4 or 5 companies. We both together are invested in one company called Presinto, whose example I have given to you. Okay, so these are the forums where your investment pitch should go. You can submit online. You can. There are databases of the investment companies or say ventures also. But then these are people who are primarily who comes into the seed stage or the pre-series A round also sometimes they invest it into. These are the next level of the funds. Generally, when we uh, consolidate our or past the stage of seed thing, we go up the seed I mean death valley value sorry death value valley. We get into the companies this can actually fund us, so their ticket size may somewhere like $1 million to 4 or 5 or $10 million. So a company where we have invested, it's called Red Dot Health. Erstwhile it was called Stan Plus. So Stan Plus, when it was like some 50 crore of valuation, we invested $1 million into it, and now that company is hovering close to 700 crore. So that particular point of time, one of such companies or the Sequoia, Axeler, and then Axel, these companies come, the venture fund comes into picture and invested into. Okay. For Pegasus, that we do work. I mean, I do work. We generally invest 4 crore in the company. Uh, and average revenue should be month on month 50 lakhs or 60 lakhs rupees a month, and then they should be break even or profitable entity. So in such entities, we generally take call to invest it into. There is a process which goes to figure out, as I try to explain, you have to have the right team, you have to have the right area or the market. There is a product fit into revenues. Your projection should be good, and based on that, we should take a call. We take a call, and all along, I mean, we should not miss this particular part because there is the Indian government also is keen on facilitating uh, uh, the investment into the startup. So you should always visit the startupindia.gov.in and learn more about the startups up there. Um, Figure out the competition also. Sometimes whatever you do, you can find your competition here listed. More you explore this, it will be beneficial for your knowledge and consolidation that you can do. I believe I have this much to offer. There's a lot of I can keep on talking around it if we have to go into the specifics, but I understand. I mean, you guys are more of just getting started, and so I thought I should explain these basics um, to you. Um, so Raviji, that's it from me. We can open the forum for the questions.
Okay, thank you, sir.
Thank you, sir.
The house is now open for question and answer. Hello, participants. Hello. If you have any query, you can ask. You can unmute and ask. Pratik, sir.
So there are two possibilities. Either everything was above the head or everything was understood. So no questions, I believe.
Hello, Pratik, sir. Is there any query?
That's fine. I mean, we may not have some query. That's okay. Good. I do not see Pratik is on their the participant list or attendee
Uh,
list.
no, sir. He is attending from Barambe, sir.
Okay. He's on mute if he's talking.
Okay, I will check, sir. Just a minute. Hello, Kuchar, sir. Bilal Hussain, sir. Any query? Sir, I think there is no query.
No problem at all.
Okay, sir. I will express the vote of thanks.
Yep.
So we have now reached to the end of this program, and I am going to present a vote of thanks on behalf of the Institution Innovation Council of SSGMC. It's my privilege to propose a vote of thanks. I would like to extend my heartfelt gratitude to our today's speaker, Mr. Subhash Lode, sir, for accepting our invitation and sharing his knowledge and expertise. Your thoughts have truly inspired us. I express my sincere thanks and gratitude to our Honorable Director, sir, for constant guidance and motivation. I express my sincere thanks to our principal, sir, for permitting and supporting us to organize this program. I would also like to thank all deans, head of department for sparing their valuable time. I would also like to thank all faculty members and students who have patiently and actively attended this program. I would also like to thank our ISC team member for the successful completion of this session. With the permission of chair, I declare that the session is over. So thank you, sir.
Yeah. Thank you, Raviji. Appreciate all the efforts. Thanks again.